James from Net News Ledger here in Thunder Bay. Let's take a look at what's going to happen in the stock market and on the political scene following Donald Trump's election.
Hey everyone. So you've probably been glued to the election coverage all week, right?
I know I have. It's been a roller coaster.
And now that the dust has settled, I bet you're wondering, what does this mean for my investments?
Yeah, a lot of people are feeling that way.
It's not exactly a simple equation, like new president equals new market trends.
Right. There are so many other factors in play right now.
We've got potential tariffs looming, bond yields doing their own crazy dance, and the Fed trying to keep the whole financial system from imploding.
Definitely a lot to unpack. It's a classic case of post-election market psychology, but with some unique twists this time around.
Okay, so let's start with that initial market surge right after the election.
You're talking about the S&P 500, the Dow, and even the NASDAQ hitting record highs.
Exactly. That was pure election euphoria, wasn't it?
Absolutely. Investors craved certainty, and once there was a clear winner, they felt a sense of relief, like, okay, now we can plan.
It felt like everyone could finally breathe again. And then there were all those pro-business policies that Wall Street tends to love.
Deregulation, tax cuts, that kind of thing. The market often responds well to that initially.
But those early gains, they could be short-lived if certain policies come into play, right?
Yeah, and those potential tariffs are a big one.
10% on all imports. That sounds pretty intense.
It's definitely a bold move. I think what's important to understand is that tariffs make imported goods more expensive.
Right, so that would benefit some domestic industries.
Exactly, like manufacturing or agriculture, making them more competitive on the global stage.
But wouldn't it also trigger inflation? Everything would get more expensive, right?
That's the risk, yeah. And then there's the potential for other countries to retaliate.
Oh, right, with their own tariff.
Exactly. Which could then hurt American companies that rely on exports.
So it's not as simple as saying the market will go up or down.
No, it's much more nuanced than that. You really have to look at the specific sectors that will benefit or struggle under these policies.
So it's all about being selective, understanding the nuances of each sector, and not just making these sweeping judgments.
Precisely. And we're already seeing this play out in how investors are reacting to certain industries.
Like tech, for instance.
Yeah, that's a good example. So many tech companies rely on imported components. If those parts suddenly cost more, it could cut into their profits.
And their stock prices too, I imagine.
Of course, that's how the market works.
Okay, so tech is one to watch closely. What about the bond market?
The bond market. It's often considered a bit of a canary in the coal mine when it comes to the overall economic health.
Because? Fill me in.
Well, we've seen a surge in bond yields lately, with the 10-year Treasury hitting 4.47%.
Okay, break that down for me. Bond yields going up. Does that mean stocks might go down? What's the connection?
Think of it like a seesaw. When bond yields go up, they become more attractive to investors.
Makes sense. Higher returns.
Exactly. So money that might have been flowing into the stock market starts going into bonds instead.
Because they're seen as a safer bet.
Right. And that's why we say bonds are a canary in the coal mine. When yields rise, it can signal potential economic trouble ahead.
Making investors more cautious, less willing to take risks.
Precisely. And this is where it gets really interesting because some stocks are way more sensitive to this shift than others.
I'm guessing tech and those high-growth companies are at the top of that list.
You got it. They're often valued based on their future earnings potential, but if interest rates are higher, that future potential is worth less in today's dollars.
So those high-flying tech stocks might not be as appealing as they once were?
Exactly. Investors are reassessing their positions.
On the flip side, aren't there certain sectors that actually benefit from rising interest rates?
Absolutely. Think about financial stocks, particularly banks.
Because they can charge more for loans.
You got it. Higher interest rates mean higher profits for banks, generally speaking.
So we've got these massive macroeconomic forces swirling around. But what about individual companies? What are investors watching closely right now?
Earnings reports are going to be absolutely crucial in the coming weeks. Companies in every sector are going to be under intense scrutiny.
Especially in those key sectors we've been talking about, right?
Exactly. Tech, finance, energy. Investors want to see how they're performing in this new landscape and whether their earnings justify their current stock prices.
Speaking of individual companies, we have to talk about Tesla.
Their stock surged 25% after the election. Yeah, it's been wild.
What's driving that kind of investor frenzy?
It's a mix of things. The potential for deregulation under this administration is a big factor. Tesla's had its fair share of run-ins with regulators.
So a more relaxed approach could be a big win for them.
Definitely. And then there's the overall excitement around electric vehicles. Tesla is the dominant player in that market.
Investors are betting they'll be the next big thing.
Exactly. Even in uncertain times, there are some companies that are perceived as unstoppable.
But separating hype from genuine potential is always a challenge.
Couldn't agree more. And let's not forget about the surprising resurgence of the crypto market. Bitcoin hit a new all-time high of $77,000.
It feels like the Wild West out there. Everyone's trying to figure out if this is the start of a new crypto boom or if it's all about to come crashing down.
The crypto market is, well, it's unique. It often operates independently of traditional markets.
So is it good news for crypto that this administration is in place?
A favorable regulatory environment could fuel further gains, definitely. But remember, volatility is always a factor with crypto.
So high risk, high reward, as always.
Exactly. Anyone investing in crypto needs to be prepared for those wild swings. It's definitely not for everyone. We've got tariffs, bond yields, individual company performance, and the always unpredictable crypto market all swirling around.
Where does the Fed fit into all this? They just announced another rate cut.
But aren't they worried about inflation too? It's like they're walking a tightrope. They are. The Fed is trying to stimulate the economy
so with your thumb,
without letting inflation get out.
Find the control stick.
It's a delicate balancing act.
Trying to boost the economy without letting things get too hot.
It's a tough job, and that's why investors hang on their every word.
Looking for clues about future rate changes.
And how those might impact different sectors.
Speaking of sectors impacted by all these changes, let's take a closer look at the energy landscape.
Yeah, traditional oil and gas companies are likely to benefit if those pro-energy policies continue.
Makes sense. But what about renewables?
Not necessarily. The energy landscape is complex and evolving rapidly.
Right.
While traditional energy sources might see short-term gains, the push for clean energy isn't going away.
So it's not an either-or situation?
No, not at all. Investors are increasingly looking at the long game, and that includes the transition to more sustainable energy sources.
So it's about understanding how both traditional and renewable energy sources fit into the big picture.
Exactly.
What about consumer discretionary?
Yes, the companies that sell us all the things we love to buy,
Retail, restaurants, travel, entertainment.
all of that. And this sector is particularly vulnerable to those potential tariffs and inflation we discussed earlier.
Yeah, if prices go up, people tend to cut back on spending.
Which can hurt these companies' bottom lines.
So investors need to be cautious about consumer discretionary stocks.
And pay attention to how these companies manage their costs.
Look for companies that can either absorb those higher costs or pass them along to customers without hurting demand.
That's a tricky balance to strike.
It is. Okay, so we've got tech facing some potential headwinds, energy in a state of transition, and consumer discretionary vulnerable to economic shifts.
Right.
What about financials? It seems like they might actually be in a pretty good spot right now.
Yeah, financials could actually be a bit of a safe haven in this environment.
We talked about how rising interest rates generally benefit banks.
And they're less exposed to those trade tensions that might hurt other sectors.
So if someone's looking for a bit more stability, financials might be the way to go.
It's like a game of chess, figuring out which pieces to move and when.
And when?
Exactly. And it's important to remember, there's no one-size-fits-all answer.
Of course not.
Every investor needs to consider their own risk tolerance and long-term goals.
Their own individual situation.
Given this unpredictable landscape, it all boils down to this. What investment strategy makes the most sense for you?
That's the million-dollar question.
It truly is. There are a lot of factors to consider, but by understanding the forces at play, you can make more informed decisions.
And that's what this deep dive is all about.
Giving you the knowledge to navigate this post-election market roller coaster.
Exactly. It's about feeling empowered, not overwhelmed.
Absolutely. We talked a lot about the potential impact of tariffs on various sectors, but let's zoom out a bit.
Yeah.
We also need to consider how these potential tariffs might impact global markets.
That's a good point. The U.S. economy doesn't operate in a vacuum.
What happens here can have ripple effects around the world.
So for investors who are thinking beyond domestic markets,
It's important to consider how these shifts in U.S. policy might create opportunities or challenges in international markets.
so it's not just about what happens within the U.S. economy.
Right, it's about understanding the interconnectedness of the global marketplace.
We've covered a lot of ground today.
We have, from those initial post-election market swings to the potential impact of tariffs, bond yields, the Fed's balancing act, and even a glimpse into the world of crypto.
It has been a wild ride, but I feel a lot more informed now than I did an hour ago.
Well, that's what we aim for.
Definitely.
And remember, investing isn't a set it and forget it kind of thing. This market's likely to be volatile for a while, so flexibility is key. Don't be afraid to adjust your strategy as new information comes out.
So stay engaged and informed. Don't just bury your head in the sand.
Exactly. And try not to get caught up in all the hype. There's always a lot of noise out there,
Yeah.
especially with the 24/7 news cycle and social media. Do your own research. Maybe talk to a financial advisor you trust.
Solid advice.
And make decisions that align with your own personal financial goals.
Right, because everyone's situation is different.
It is. And it's important to remember that investing is a marathon, not a sprint.
Don't freak out over every little dip.
Keep your eyes on the long-term prize.
Well said. Here's one last thing to think about.
Okay.
We've talked a lot about how this election and potential policy changes will impact different sectors of the U.S. economy.
Right.
But what about the global landscape? How might these shifts affect international markets?
Ooh, that's a great question. It's a big world out there, and we can't forget about how interconnected everything is.
Yeah, what happens here in the U.S. can have ripple effects around the world.
Absolutely. The decisions made in Washington don't just impact the U.S. economy. They ripple out and create a whole set of new dynamics in the global marketplace.
Something to keep in mind as we navigate this post-election world.
For sure.
Lots to think about. Thanks for joining us on this deep dive. We hope you feel a little more informed and a lot less overwhelmed.
It's been my pleasure. Until next time, stay curious and keep learning.